Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they have started the week, in fact, they have started the day on a weakish note following the mixed cues that we got on Wall Street.
Through this QIP, I may realize some 700-800 crores.
It is appreciable that RBI actually went ahead and hiked rates, kind of reinstated the inflation-fighting credential.
I think the Nifty Bank is clearly indicating 0.6 down now on the Nifty Bank. The bigger indices, Sensex, Nifty, are down about 1/3%.
Between now and the elections would be the great time to accumulate stocks and maybe wait for another 3 years to get really good returns on that.
At least for now, it's in the hands of the bears. So the Sensex is down almost 250 points.
We have the Nifty, which is down around 0.5%, and the midcap index, which is flat with a little bit of a negative bias.
On 1st of September, we have to ensure that we have the 3-year TP.
These are still struggling on the back of resurfacing of trade wars. So as we speak, the benchmark indices are down close to about 0.6, 0.7%.
Well, that was the day so far. Welcome to Closing Bell. I'm Prashant Nair. With me is Lata Venkatesh, and over the next 60 minutes, we will track markets. And of course, the closing all the way at 3:30, 94 points down on the Nifty, and it is looking bad, at least for large caps. The strange thing about the market so far has been that mid caps and small caps actually have recovered quite a bit. They're not at the day's high. The mid cap index is up 1/3% or so, a little over 1/3%. The small cap index is up as well, but of the highs. But you know, look at the difference: 1/3% higher on this market, and a steep 95, nearing 100-point cut on the Nifty at this point in time. Lata, afternoon.
Good afternoon. Prashant, clearly we are not the luckiest charm for Closing Bell. We haven't seen a 1% cut on the Nifty and the Nifty Bank in quite some time. But let me look at it as the brighter side, why we are the lucky charm for the market. Pull up the Asian indices for you and you will know what I mean. Dow Jones anyway ended, or Wall Street ended with red across all indices. But you should look at the Asian indices. The least that any index has fallen is 1.5%, and that would be Kospi and Taiwan, Singapore index. And the bigger ones, the Shanghai and the Hang Seng index, have ended 2.5% higher. Likewise, you can look up the European indices. I mean, these are stabler indices, and even over there, 2/3 of a percentage point, and DAX going down 1.6. The point I'm trying to make is that there is yet again a fear let loose of tariff war between US and China to start with. And China is, it's not just China that gets affected. Chinese production is because of supply lines, supply chains that run across the ASEAN countries. So South Korea, Taiwan, Malaysia, all these countries get impacted if Chinese output were to fall on account of higher tariffs that these products suffer. So that's why you see this across the board fall in Asian markets. Now, because you are expecting lower production in several indices, metal stocks have fallen across the board. Steel stocks have fallen across the board. Manisha was telling us LME prices are crashing for several, I mean, they've been falling for weeks now, and there has been a steep fall today, both in the Shanghai metals and in LME metals yesterday. So in this scenario, actually, India becomes a safe haven. India was never part of the supply chain of China and the ASEAN countries, and therefore what hurts them won't hurt us as much. We also suffer because metal prices are lower. Our Tata Steel and Vedanta and Hindalco get impacted, but not with the same intensity, and certainly not all the electronics and other producers who go into the Chinese supply chain. And therefore, you know, India becomes a safe haven buying. Nimesh was telling me that across the board, the traders he spoke to actually spoke about FII buying in some mid-cap and small-cap stocks. The other positive for India is crude. Crude has fallen closer to 72. It's again the same, probably lower global growth because of tariff war syndrome that is impacting oil as well. Besides, of course, higher inventories. But lower crude has its own beneficial impact. And if you look at the green list in the mid-caps, you will find plenty of, oil sensitives. the 3 refining companies, and plenty more that are impacted by, the paint companies typically that are impacted by lower crude derivatives. So that's what makes the mid caps, slightly better. But the bigger indices, Nifty, Sensex, and the Nifty Bank in particular, is falling in sync with global markets.
Oh, absolutely. So, lots of factors at play. Well, let's see. Because this kind of dichotomy can persist for a day, maybe for 2 days. But as we saw over the last 2 weeks, when the broader market was immensely under pressure and Nifty was making a life high, that didn't continue for very long. We saw, between 6 and 7% rallies on mid-cap and small-cap indices. So, at some point it'll start to converge, whether this will pull that up or that will bring this down. So let's see. Well, this is what's coming up over the next 60 minutes or so on the show. Our guests are going to be joining in, and Mr. S.P. Tulsian comes up first as always with his fundamental view. Mr. Prakash Diwan is with us here in our studios. We've got Prashant Prabhakaran of Yes Securities who will come in. He'll talk about his assessment of the earnings, his assessment of sort of numbers, etc. as well. We'll lay out the fine print of the earnings and discuss with Krishnan ASV of SBI Cap Securities the big bank numbers that we had. And as always, our technical experts will take you through key trading strategies for the last hour of trade.
Okay. Well, so how should you trade? How should you position yourself in the last hour of trade? Ashwini Gujral and Mitesh Thakkar first to give us closing strategies. Gentlemen, thank you very much for joining us. Well, first up, Ashwini, what do you do with a Nifty that's over 1% lower? Even at this hour, is there a last hour short strategy?
See, both Nifty and Bank Nifty actually pulled back and tested yesterday's lows and failed from there. So the last hour, given the Bank Nifty expiry, etc., it looks like HDFC Bank and Kotak are leading the market on the downside. Certainly, TCS is also facing selling. Bajaj Finance. Who owns these stocks? Chances are the large players. I think they are taking a view that we need to go lower. In case those positives had to play out, we should have crossed 11,340, which we didn't. So my sense is the last hour trade should be on the short side. I think HDFC and Kotak will come under further pressure, and maybe it's overall tightening of liquidity all over. That's the overwhelming factor. These micro trades, crude sensitive derivatives, etc. That happens only once a serious correction happens in all the markets. Having said that, for the moment, Oro Pharma is a buy with a stop of 610, target of 635. HDFC Bank is a sell with a stop of 2140, target of 2090. And Kotak has resumed its sell-off, so that's a sell with a stop of 1295, target of 1250.
Okay, Mitesh, what would your trades be last hour?
I have 2 buy calls, but I think broadly I am looking at 11,200 as the key support. If we start breaking that, then I think we'll cut down on the long exposure. One of them is a pharma stock. Strides Arcolab is giving a good breakout today, so buy with a stop at 390 for targets of 420. And Manappuram is a buy as well. Keep a stop at 106. Look for targets of 115.
Okay. Actually, there are a couple of things that are keeping the markets cheered. One is that some of the stocks have moved out from the dreaded ASM list, the additional surveillance measures list of SEBI, and those Himadri and Dilip Buildcon. Those are some of the stocks that are leading the mid-cap rally as well, among other things. I mean, these are also factors that, of course, the graphite stock's doing well because HEG's numbers were mind-blowing and maybe expectedly so. So the mid-cap market is moving on many pillars, and some of them are, of course, cats and dogs that are running along with others. MGL, again, rising because of results. Well, so let's get some fundamental view as well. Mr. S.P. Tulsian is with us, as is Prakash Diwan. Good afternoon to both of you. Mr. Tulsian, let us start with the bright side of the market because we have lots of negative also to discuss. Graphite India is moving on the back of the good numbers from HEG as well. What did you first make of the HEG numbers, and is it still worth a buy?
See, Lata, after hearing the management, actually what I liked about the management commentary is 2 things. One is that the prices are not seen softening. at least for this quarter, though the management has not given a broad outlook for the entire FY19. And second is the increase in the capacity utilization at the upper end of 80% kind of range. And that both the things are seen quite positive. And if you have seen the EPS of closure to about 200 rupees for HEG, and that kind of things, if can get extrapolated for Q2, at least you have the near-term visibility for next couple of months to take a call on the stock. Now it's just a matter of time whether we want to ride the momentum or we wait for because these stocks, they do show the some kind of, you can call them as a high beta stocks, and they do show correction as well. So keep radar on your radar, and HEG is definitely looks good, and taking cue from that, because graphite is also the similar story of the graphite electrodes. Both are seeing similar things. So again, the things can be looked into for HEG as well as graphite. And just to extend this theme forward, we can look to buy into the stocks maybe like Goa Carbon, Himadri Specialty Chemical, Philips Carbon Black, or maybe Rain Industries, because they are also seen all complementing, in the similar business, not strictly comparable with the graphite electrodes, but in the similar line of business, which will be seen quite beneficial for them as well.
Well, while you say that, Goa Carbon also, I think, is doing very well at this point in time. Yes, Rain Industries is up 5%. Goa Carbon and Philips Carbon Black should also come up for you. Goa Carbon actually locked in circuit. It has got, I think, two things going. It was in ASM as well, and it has come out of that list. And that's Philips Carbon, which is not participating. Well, before we discuss this issue more, earlier today, as Mr. Tulsian said, we did speak with Ravi Jhunjhunwala, Chairman and Managing Director of HEG. We were discussing the company's first quarter numbers. Hear out what he had to say.
10 years or so, our policy has been, our payout ratio has been between 30 and 35%. And given the extraordinary numbers that we saw last year, our last year's payout was about 38%. And I believe we will, there's no reason to believe that we will not continue with this level. And 35 to 40% payout is a fairly large number. And I'm sure we'll keep doing that. Last year, our run rate was about 80%, and for the year, we had guided to high 80s. So that ramping up is happening. It hasn't happened much in the first quarter, but going forward, this ramping up from the low 80s to, let's say, high 80s is going to happen over the next 3 quarters or so. So the tonnages are going to go up slightly.
What a move these stocks have had. 150 rupees on HEG in February of 2017. And we're just finishing the first half of 2018, and it's at 4,400 odd rupees. I mean, rarely, very rarely do we see such a secular, strong move in anything in such a short time span. But let's put up quickly Indigo as well, Interglobe that is. I mean, Interglobe got sold off to about 880, 890 post those disastrous set of results. It's seeing some action. I mean, it's actually picking up 4.5 higher, 965. Prakash, any views here on Interglobe? Is it going to be about the direction of oil and getting that right?
No, I think that's been priced in quite abundantly, liberally of sorts. But you know what? Today's announcement, I mean, the recent announcement from Jet Airways actually is what's spooking the market a bit more again.
Pay cuts.
Yeah, and the fact that you know they have admitted to a lot of you know lapses in terms of where they could have done things better, and how it's kind of impacting the entire company's balance sheet and worsening the situation. So what it tells you is that the erstwhile leader is facing such an issue. Can Indigo become from a price maker to a price taker, you know, where they set the prices higher, and whether they are able to get away with that in terms of managing those load factors. So that is a concern. I think airlines always go through this phase. I mean, you have these good times, and then, you know, even for people who work in airlines, you ask people who have been there for a long time, after every 6, 7, 8 good years, there's always this uncertain 2, 3 years where, you know, you have...
Actually, if you look at the price chart of Indigo, it's like a 5 or 6 quarter wave. You know, it goes up to about 1400,
and then 2, 3 quarters,
about, you know, the low it made was about 700 or so.
Yes.
And
so,
then it again goes up.
So
right?
you'll have to wait for this to kind of, you know, find its level, and it would start rising again. I don't see why they would be out of business or something that the company is going to.
They're the number one player.
To be honest, India is one market where the growth is very clearly, the visibility of growth is immense. It's just how quickly they.
But it's also amazing that the number one player with whatever 30-35% market share makes a 28 crore profit, right? I mean, in the quarter.
Yeah, that just goes to show you can lose the initiative so very quickly. At one point, we thought even when crude prices were rising, that the demand is so strong that they are not even bowing down when crude prices go up.
They have a fuel surcharge. They got away with passing on all that,
Yes.
Lata. But the problem is now the headroom to growth is getting inhibited by lack of infrastructure. You don't have so many airports which, where you could kind of justify those flights and parking bays and also. I think it's a challenge which is more to do with the ecosystem rather than just the company on a standalone basis.
Okay. Well, airlines always a great topic to discuss. And don't speak about airline employees and good times together. You think of the king of good times and then you're afraid of that sector. We have to take a break on that note. We have lots more interesting sectors to discuss. First up, we will get chatting with ASV Krishnan of SBI Cap Securities on how the banking sector's first quarter numbers so far have been. Stay tuned.
I mean, it's just the Nifty. The advanced decline ratio is, you see a 85-point down market and you see, the advanced decline, etc. has gone to hell, but nothing of that sort. Advanced decline is evenly matched. The mid-cap and small-cap indices are up. 90 points in mid-caps, 35, 36 points in the small-cap index, but large caps are hurting. So, I mean, look at the ones which are selling off. Reliance Industries, Maruti. I mean, the big ones from each sector. TCS. You've got HDFC and HDFC Bank, both which are down. And throw in a PSU bank name like BOB as well, which are selling off. And I mean, this is pretty much, I think, 50-60% of the pressure that you're seeing out there on the Nifty. One sector which is doing very well in large caps is pharma. Aurobindo, Lupin, Dr. Reddy's, Sun Pharma. So there is a fair bit of activity here on the upside. Mr. Tulsian, we've discussed this before. I think you've liked Lupin in the past and you've had positive views on Aurobindo. Correct me if I'm mistaken, but what's your sense?
See, Prashant, in fact, three stocks we have been keeping our continuous buy call. That is Aurobindo, Glenmark and Divi's Pharma. And yes, the Biocon continues to remain as a secular buy. But yes, Lupin we have added, in fact, maybe last about couple of months when it slipped to a level of about sub 800, and we are seeing a good value in maybe because even if we see the management commentary which has not been very gung-ho on the FY19 numbers, but in spite of that, if you take a valuation call, I think Lupin also falls in that category. So if you are looking to buy pharma stocks, be selective and have a little longer term time horizon of maybe 6 to 8 months on these stocks.
Okay, well, Mr. Tulsian, just hold on. I think we are getting the Marico numbers and that's much awaited. Net profit has come exactly in line with expectations. We have to actually check for the volume after Dabur set the bar so high. Okay, the revenues come a little better than expected, slightly, maybe about 40-50 crores better than expected. 1984 was the expectation. But the revenue is compared to 1681. So we were expecting an 18% rise. It has come in closer to a 20% rise. So 1681 has become 2027. That's almost 20% in terms of a rise. The profit was 235 crore. That's come in at 260. That's about 10% rise in profit. So 10% rise in profit and a 20% rise in revenue. So clearly given away a little bit at the EBITDA level. EBITDA 355 crore. That's largely in line with expectations. So 12% higher. That's the story. 20% up on revenue, 12% up on EBITDA, and about a 10% rise in profit. So clearly margins have given up a little bit, 17.5% in terms of margins. But we will really want to know what they did by way of volumes. Remember, the Q1 of last year was a contraction of volumes for all this GST and other issues. The volumes that contracted for Marico. So at a year-on-year level, they should do, yes. Yeah. So there's mind-boggling Dabur number. and similar growth and volumes of other FMCG companies should be shared by Marico as well in terms of a volume growth.
Margins, though, are a bit puzzling because if you look at the big commodity for Marico, it's copra, and copra prices are down almost 20% from the beginning of this year. And they continue to actually fall. So margins coming in against at least what was expected. I think I saw the margins are a little lower. EBITDA, the absolute number is also down by about 10 crores.
I think,
a miss of about 10 crores or so.
If I'm not mistaken, I'm going to object
margin
to
17.5% compared to a poll of 18.4%.
Copra prices rose in the last quarter. So I think that's what has hurt them.
So Jan to March they were soft, and then it's been slightly.
I think from the beginning this year,
so net it could have been probably lower than what was December end, but the rise has been more prominent.
Maybe in this quarter.
These last 2-3 months.
And so have been Cardi prices. Rice bran is important.
And the other challenge which Marico has been facing is the Paras portfolio is not something that has given them those kind of.
1 minute, Prakash. I'll just run through the numbers. Mangalam is waiting by, and he's done the math as well. We should be okay. I thought Mangalam was mic'd up with all the details. We have to look for what the parachute numbers will be. Parachute and Saffola would be the important ones that we will look for. I think he's still browsing through. You were telling us about the Paras portfolio.
So, one of the key growth vectors for Marico has been the new portfolio, and that is why, it was very important for them to leverage that, because that helps them de-risk from this parachute segmental focus that they've always had. They're known as a coconut, oil-based player or a coconut product company. Now that is something where those other products could do much better. But somehow in the modern trade, the depth that you would need to see for some of these big brands, which were very big when Paras built them, hasn't kind of rubbed off. So that's where they've always had to sell things at a slightly lower margin. That margin compromise is a consistent issue. It's like what TVS goes through in the auto space.
Okay. I think we have Mangalam ready. Mangalam, any further details you can add? We have 20% revenue, 12% EBITDA and 10% on profit.
Right, Lata. So the revenue growth is positive, that is above expectations. The margins have come off on two reasons. One, copra prices had risen year on year, so we have seen some growth there. That means the gross margins, they've declined by about 500 basis points. So that explains the sort of miss that we're seeing as far as the EBITDA is concerned. And optically, the EBITDA margins are also looking lower because the revenue has improved by 20% as against expectations of around 17-18% on the top line. The company has maintained its ad spends, so we need to watch out for whether going ahead they will increase their ad spends or not. That will give you an indication of how margins are likely to be, and the net profit as a result of lower than expected EBITDA has come in lower than expected. But top line growth is a positive for Marico. Remember, the stock trades at around 44 times and was at a record high ahead of the numbers itself. So maybe some bit of profit taking. We are awaiting the press release to come by, and in that there will be the volume growth expectation. So we were working with a number of 10 to 12%. Let's see whether the company has outperformed that or not, especially given the top line growth has come in at 20%.
Okay. Thank you very much, Mangalam, and do alert us as soon as you can lay your hands on the press release. Mr. Tulsian, you went through the big numbers that we read out. What did you make of the Marico performance?
See, Lata, in fact, I've been saying this for maybe last couple of weeks that I'm keeping myself away from these all expensive stocks. Firstly, I don't think that numbers have really cheered because the EBITDA, the margin and the bottom line is very important. And secondly, if you take maybe 7 rupees 50 paisa as an EPS for the FY18 or FY19 and giving a P multiple of closure to about 47, 48, because the kind of performance which we have been seeing now maybe for last 1 week or so, all the high price stocks, whether it is in the consumption space or in the banking space, or maybe they are all seen correcting because the buying is becoming broad based, and in fact you are seeing the buying coming in other stocks also. So I don't see any reason for the Marico to really one should look to enter into at the current price. As I said, at a P multiple of maybe 46, 47. In fact, that view was held by me for Dabur also, in spite of showing excellent volume growth of 21%. And I've said that maybe keep a calm on Dabur also. So there is no point in taking a positive view on Marico at the current level.
Okay, so Marico 3.25% lower. Yesterday it was Imami. Before that it was Dabur. Dabur, of course, by far out of the ones which have reported stellar numbers. 21% volume growth for Dabur. Marico, as Mangalam pointed out, will get you the numbers in a bit. The stock is selling off 4 1/3% higher. The life high is about 370 or so. So I mean, it's not very far, 375 actually, 351. So it's 20 odd rupees away from the life high, and 40 times earnings plus. So little room for comfort. Mr. Tulsian, just to go back to one particular name which I think you used to track quite closely, Kiri Industries. So they intimated stock exchanges today that they have this case in Singapore courts which is going on against Daistar, minority oppression. And they kind of said that, well, it's going in their favor. The case now most likely will head to the Singapore Supreme Court. They expect resolution in the next 6 months. But the crux was this. They bought that stake for about 100 crores in 2010. They have 38% in this company. And the total business now, according to them, could be valued at about $1.5 billion or so. The court has asked their partner to buy out Kiri's 38%. According to them, it should be at the $1.5 billion valuation. Your thoughts, sir, if you still track this?
See, Prashant, if you first see the background, since you have, in fact, Kiri went into trouble because they acquired this Daistar in 2010. In fact, that was seen to be big acquisition for them at that point of time. Now they won the arbitration, or they maybe the battle or the case which they have been fighting maybe for last 4 or 5 years to be acquired these at the fair valuation. Now the fair valuation is seen to be a vague point, which is seen in the order against which the Daistar people have gone against in appeal to buy their 36-37% stake. It's difficult to take a call whether the outcome will be seen in 6 months or not, and I'm honestly not aware about the international litigation procedure, where the appeals and all these things will get lied. But I think that maybe unless until you have and because of that, in fact, the die and die intermediate business, which has seemed to have shown a very remarkable growth in this last 2 and 3 years, have not been able to got captured by Kiri Industries. Maybe the other players like Bodil or maybe Aksharchem or maybe Bagarias, they've really captured on the vinyl sulfone die, that is H acid, J acid, gamma acid. So I think that maybe this has elongated the process of the legal litigation, and I don't know what will be the outcome, whether it takes 3 months or whether it takes 6 months. But yes, one has to really wait and see whether they will be able to fetch that, because the question of fair valuation and obviously the person who is holding that stake of 36% who is to be bought over will always be taking an optimistic valuation. So let's see and wait for the outcome of the litigation. Till then, I don't think that stock will have any kind of positive trigger to move up further from here.
Okay. On that note, we'll thank you, Mr. Tulsian. Thank you very much for joining us. We are having a special banking discussion now, and for that, Abhishek Kothari is actually standing by. He has made a comprehensive report of all the banking numbers that have come so far. So, Abhishek, first tell us, what are your key takeaways?
To look at the banking performance overall, the profits have actually improved from being red in the previous quarter. So banks are back in black versus, the red that they saw in Q4. The overall profits now stand at 8,072 crores of the 23 banks that have reported their cards versus 11,900 crore in the Q4 FY18 results. But on a YOY basis, these 23 banks have reported a decline in profits by 27% on account of the stress in the balance sheet and the mark-to-market treasury losses that they have seen. Overall, the gross NPA ratio of these banks have improved by 34 basis points quarter on quarter. The best profit movement, that is from being red to black, has been for Canara Bank, Bank of India on account of tax write-back, Bank of Baroda and Axis Bank, while the worst has been for ICICI Bank, which reported a net loss for the first time, HDFC Bank and Kotak Mahindra Bank. You look at the PSB asset picture has actually improved. So 7 PSU banks have actually trimmed their losses by 1/10 quarter on quarter. That is, their losses are down by 91% on a quarter on quarter basis. Their gross NPA in absolute value is down by about 2.3%, while the ratio is 31 bits lower. However, they are losing their market share in the balance sheet on account of lower growth YOY and decline in balance sheet growth quarter on quarter. The private banks have reported a strong jump in their profits. The profit profits are up 37% on a quarter-on-quarter basis, while ICICI Bank has reported a net loss for the first time. Unlike PSBs, the gross NPA in absolute value for private sector banks has remained flat quarter-on-quarter, but their gross NPA ratio has improved because their balance sheet continues to grow. Let's look at the slippages picture. The PSB and private banks, that is the PSU and the private banks, were expected to report lower slippages in this quarter versus the previous quarter. Surprisingly, Yes Bank and SDFC Bank have reported higher slippages in this quarter compared to the last quarter. The biggest decline in slippages on a sequential basis has been for ICICI Bank, Axis Bank, Canara Bank and Bank of Baroda. Back to you.
Okay, so there was a bit of a turning of tables, slightly higher than expected slippages for the otherwise stronger performers, HDFC Bank and Yes Bank, and much lower than previous quarter slippages for ICICI Axis, BOB and Canara, the ones that were guilty of higher slippages. But really, they coughed up so much slippages last time that it just had to be less than the previous quarter. Well, let's get to the expert now. ASV Krishnan of SBI Cap Securities joins us now. Krishnan, first the private lenders. Do you think that now they have sufficiently belched out all the poison and they are buying candidates?
Yeah, so private sector is corporate lenders. Very clearly our view is that there is a turnaround that we have been witnessing. I think in the case of maybe Axis Bank, we are already there. Possibly in the case of both Axis and ICICI Bank, we may have seen the worst in terms of the balance sheet impairment. But now it has to translate into earnings. And saying the last time around that I was in the studio, I mean, the earnings catalyst needs to begin playing out. I think part of it will be resolution. Part of it will be the fact that new growth will be a higher quality growth. And I think we are seeing evidence of that in both Axis and ICICI Bank. So yes, I mean, we are constructive on corporate sectors, which the profit pools will begin to shift again towards these corporate.
Okay, actually we have you on a very, very scratchy line. We'll try and redial Krishnan. We are able to get your voice with difficulty. Ashwini, to get you on a chart view, if you were to draw the charts of ICICI and Axis, which is preferable, or are both avoidable or both viable?
ICICI Bank is definitely better, and at some point this decline possibly will end before 260, and then from there you can buy, etc. But again, we need to make a higher low on both of these stocks. But for the moment, I think we have a Bank Nifty expiry, so that's playing out. European markets have fallen further, hence the markets are losing steam. But between the two banks, I think ICICI and SBI, they look a lot better than other corporate banks.
Okay, Prakash, your view, and would you think the PSU banks stand a better chance simply because the valuations may be a little better? And they have shown some better numbers. BOB, for instance, definitely.
Yeah, so very true. Because the damage was much more severe, the respite also looks more, accentuated. But I think the concern with the private sector banks is now the likelihood of stress developing in the SME segment. And what Mr. Uday Kotak flagged off in the con call, I think a lot of people are taking that very seriously. So if the next wave of NPAs is going to emerge from the smaller and medium enterprises, some of these banks which have grown aggressively on the back of credit growth there will step back. They might not have an impact which is so severe because they've done enough provisioning. Look at Kotak's provisioning. I mean, it was liberal. Yeah, much more liberal than what was warranted, possibly looking at the numbers right now. But so some of these banks would, once that correction happens, they would again be more promising in terms of growth. So yeah, the PSU banks do offer you a little bit of a momentum opportunity of sorts. I wouldn't call it value investing even now. But still, there's lots of ifs and buts around the policy and regulations related to PSU. So people would probably stay back.
Okay. Well, we have Krishnan again, and let's hope that the line is better. Christian, what's the pecking order in the PSU banking space from the numbers that have been announced? So your own parent is excused, the numbers are not yet out. But from the remaining, BOB, Canara and the rest.
Right. So from among the PSUs that have reported so far, I'm hoping I'm a little more this time around. So from among the PSU banks that have reported so far, I would think Bob and Canara Bank have stood out. But as one of your earlier guests also mentioned, it's very hard to take a structural call on some of these PSU banks when there is uncertainty around who gets recapitalized. Are there, M&A candidates? Are the larger banks likely to be saddled with some of these PSU banks, etc.? So what paper are you buying in today? That's a very hard call to take. Right? But having said that, only in terms of a pecking order, I would think since we cannot comment about SBI, among the remaining, I would place Bob right at the top. There is again a leadership uncertainty there in terms of what happens after September. So you price that in, and then at a certain price, it becomes valuable.
Okay. We have sources telling us that continuation of the current managing director is almost a given, but these are sourced information.
Yeah, so we can't. So very hard to take a fundamental call based on source-based information. But I would imagine this leadership, if it gets a little more time to stabilize the ship, then it's an easier call to take as an investor, as an analyst. There is greater certainty, less transition risk, etc. Because continuity and stability are a given then.
All right, Krishnan, the line is not helping, but we got on board your view that you would be happier if you got a more steady hand at BOB. You should trust CNBC TV18 sources. It's almost a given that Jayakumar continues after October. But yes, I guess we all have to wait for the official announcement. Tell you something, today the PSU banks are in a losing spree, but it's more the smaller banks, the Uniteds, corporations, Punjab Sindh Bank, and of course PNB also, that's losing a lot. Of the lot, Bank of Baroda has lost a little less. Is there still a trade left in any of the PSU banks, Ashwini, on the short side for what's another 25 minutes of trade?
See, definitely, Bank Nifty expiry is ending on the downside, but the trouble really is with these large banks, Kotak and HDFC Bank. But a lot of these, Canara Bank, BOB, PNB, the gains they made, possibly half of them will get given up because as we go into the close, the selling is accentuating. But mainly the selling is on the, haloed financial groups, HDFC, Bajaj Finance, the private financials. So it looks like a more FII-driven selling, but chances are all of these guys are likely to lose 50% of what they gained.
All right.
By the way, the Nifty was down 100 points, and we're down 97 now. Bank Nifty is down 250 odd points or so. So practically almost. Bank Nifty actually is a little off the lows, but Nifty pretty much at the lows of the day. There's about 25 minutes more to go before we shut shop for today. Advanced decline, everything pretty much similar. What has changed from 230 also, apart from more selling on the Nifty and the Bank Nifty, a little bit more, not much, is that the mid-caps and small caps are also now almost turning into the red. We started with 0.4, 0.5% gains there, but there's 0.1% gain on the mid-cap index, and I think something similar on the small caps as well. So we'll keep that. You can see that sort of downturn there on those indices. We take a break. We are back and we track markets for you. Our guests are here. We get you more trading ideas in a bit.